Three main central banks will be delivering their interest rate decision, and with me to assess the market impact is Bob Mason from FX Empire. Bob, on Tuesday the RBA will announce their interest rate decision. What sort of comments do you expect to see?
Macroeconomic data out of Australia has been relatively upbeat through the second quarter and going into the third quarter. The only really disappointing numbers being this morning's company gross profits for the second quarter, reversing last month's 5.8% with a 4.5% decline this quarter. From an RBA perspective, the economy in China has been continuing to be upbeat. Last month's manufacturing PMI numbers were positive, suggesting that demand for goods remains and raw materials, so that's certainly positive for the economy. The RBA will definitely be raising some concerns, however, looking at household debt, tepid wage growth, and obviously the housing sector, which they'd raised concerns about in the previous statement. There's growing concern over the labour market. Wage growth obviously has continued to be weak, so if there's any deterioration in labour market conditions, then the domestic consumption side will definitely weigh on the economy. Trade data has been pretty positive, so the second quarter GDP numbers will be pretty upbeat. But I think while the RBA will concede that the economy has gained momentum, there are some sort of downside risks looking ahead. So they'll focus on Australian dollar appreciation. Obviously it's sitting just shy of 0.8 at the moment, and that's when you're considering the current sort of risk-off sentiment with North Korea. Something they'll probably actually raise as well within the statement. Obviously, disruption to the regional economy will be there should things escalate. So obviously they'll maintain their current stance on their neutral position, but I think they'll be raising concerns over the labour market, Australian dollar appreciation, and whether the economy can sustain its growth that they saw in the second quarter should labour market conditions deteriorate. Obviously retail sales, etc. could become weak.
The Bank of Canada will also reveal their interest rate decision. How would you advise loonie dollar traders to position themselves?
There's certainly been plenty of debate over whether the Bank of Canada will lift rates this week. I think the general consensus now is that they'll hold, but they'll provide some forward guidance on looking to lift rates before the end of the year. Obviously the economy has outpaced the US. Outlook remains strong, and while there's been some concern over the appreciation of the Canadian dollar, ultimately we feel that the global economic outlook should be able to support a stronger CAD, and that should support a more hawkish Bank of Canada, who will likely point to a further rate hike before the end of the year. Trade data has been strong. You know, economies within Europe and in Asia have remained resilient. The only downside at the moment being, you know, obviously the risk-off sentiment from North Korea. I think there'll initially be some disappointment from the decision to hold on rates, but the CAD should gain further momentum over the near term as the markets look ahead to when the next rate hike is likely, with more rate hikes likely ahead next year as the Canadian economy continues to outpace that of the US. There's the NAFTA side to also consider, and obviously as things stand, that's deemed to be a positive for the Canadian economy, with restrictions on free trade agreements across the world holding the Canadian economy back. So any changes in NAFTA and that could also be CAD positive.
Euro area GDP third estimate will be released on Thursday, followed by the ECB rate announcement. Do you think Thursday will be bullish or bearish for the euro?
For the ECB, from a GDP perspective, third estimate's due out on Thursday. Data since the second estimate that's been out of the Eurozone includes trade data for June, which was positive for the euro, the surplus widening, which certainly supports the second estimate numbers. We don't expect the GDP numbers to be softer on Thursday ahead of the ECB monetary policy decision and press conference. I think, you know, so while the euro will gain some momentum through the early part of the day, focus will be on the press conference. No one's expecting the ECB to deliver any shift in monetary policy. I don't think we're going to hear anything on the tapering side either, with members of the ECB having already spoken of the likelihood of the ECB holding back on any talk of tapering until later on in the year and likely December. Time's running out, however, though, and ultimately it's going to be quite an interesting press conference when you consider the fact that economic momentum remains, the global economic outlook remains positive. So how Draghi is going to be able to hold off talking hawkishly will be interesting. And I'm sure there'll be some Q&A on when the tapering will happen, and it's going to be quite hard for him to not let some of his views out, which will likely be euro positive. The ECB remains concerned about euro strength. Obviously having touched 120 last week, and any more hawkish commentary will certainly see stronger euro. It just seems very hard for me to sort of see the ECB continuing to talk it down. Obviously inflation remains relatively soft, but with the economic momentum there and growth, and the fact that the tapering, the asset purchasing program and the need for tapering is becoming ever more necessary, I think it's going to be euro positive by the end of the day.
Well, that's it from me today, but keep checking back for all the latest.